What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing analysis on Silicon Valley Bank.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video I will show you that probably we are at the edge of cliff of new recession that might be even worse recession compared to the Great Recession of 1929. And I will show you what should you do in order to protect your capital and what should we expect next in upcoming weeks. So let's start with the price chart as usual. As you can see, Silicon Valley Bank, ticker symbol SIVB, lost about 88% of its value during just several sessions. And the most severe sell-off happened just 2 sessions before the end of the week. And it lost about 80% of its value from this point. So, harsh sell-off. And what was the reason of this? If you type in Google search bar SIVB stock and switch to news tab folder, you will find a lot of news on this topic. Because right now, let me show you that Silicon Valley Bank is one of the hottest topics on the market. As you can see, if you type in Google Trends SVB and switch to interest over time chart, you can see that from March the 9th it has a quite harsh movement to the upside, and the number of searches increased dramatically during last couple of days. And let me show you this article, for example. It was published on theeconomist.com and it's titled, "What does Silicon Valley Bank's collapse mean for the financial system?" And the disaster starts on March the 8th when Silicon Valley Bank announced that it needs to raise more money, about $2.5 billion to plug a hole in its balance sheet. Right after that, its share price plunged by 60%, and definitely it was quite expectable because this action leads to massive dilution of existing shareholders, and definitely it is not the best choice during the recession to raise more money. On top of that, some venture capitalists told portfolio companies to withdraw their money from this bank, and this leads to the rumors that SVB is at the edge of insolvency. And definitely when we can see these rumors on the market for the particular bank, a lot of people start to withdraw their money from their accounts, and this leads to the panic itself. And let me show you some interesting detail that this problem wasn't the problem of the March 2023. Right here you can see the list of insider trading of Silicon Valley Bank, and we have several lines that was filed recently. At the very beginning of March, Gregory Becker sold a lot of his shares. He sold about $3.5 million in value of Silicon Valley Bank, and CFO also sold about $575,000 in value of Silicon Valley Bank. And previously Michelle Draper, she's a CMO of this company, also sold some of her shares. And I have to say that these actions are quite suspicious because it was made right before the crash of Silicon Valley Bank. And I have to say that we might see even the trend continuation not only for the Silicon Valley Bank, but for other banks that are not so big and that have probably the same problem. Let me show you right here that, for example, First Republic Bank also lost during last several sessions about 50% of its value. Next bank is Signature Bank, lost about 50% of its value as well. Next one is the Western Alliance Bank Corporation, lost about 59% of its value, but then bounced back to the upside and gained about 61%. So we have a harsh sell-off all across the market. If you take a look on the heat map, and if you switch to weekly performance, you can see that the entire market is deeply in red, especially the financial sector. But if you switch to one-day performance, you can see that major banks are pretty much in green during just one session. And this means we can find some kind of safe harbor in the biggest top 10 banks of the United States. And let me show you the list of these banks. It is a JP Morgan Chase with a $3.31 trillion of total assets, Bank of America with $2.31 trillion, Citigroup with $1.714 trillion, Wells Fargo with $1.7712 trillion, US Bancorp $591.2 billion, PNC Financial Services $553.39 billion, Truist Financial Corporation with $534.19 billion, and Goldman Sachs with $513.91 billion. On top of that, you should be protected by the FDIC insurance, and for those of you who don't know, it is the Federal Deposit Insurance Corporation that gives you an insurance for your banking account that will not exceed $250,000. And definitely, if you have more money, you should spread this money in between your different banks, in between the top 10 banks, and this will lead to the most safest position if you have a cash on hands, if you don't have any other assets. So, and what should we expect in upcoming week? Definitely, it will be extremely difficult week for the financial system, and this Friday, Mr. Joe Biden told that the Tuesday's CPI data should be okay, and in my opinion, he told it because he wants to buy some time for the financial system to probably try to solve the Silicon Valley Bank disaster. And I have to say that upcoming weeks, couple of weeks, in my opinion, will be crucial for the entire banking system. And if we will see another black swan, and this black swan might happen even from the European markets or even from Russia and Ukraine crisis, and if it happens, definitely we will have an extremely high chances to fall into the greatest recession ever for the world financial system. And this is really scary. But this potential crisis also gives an extremely lucrative opportunities for those who don't want to give up and who want to benefit from this situation. So I think that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up on the attack. Baby, I'm bad, I just wanna get caught up in this life. I'm crazy, I'm mad, doing no cap. Only God wants you, better go live it up.